Good morning, everyone, and welcome to this morning's webinar. We were just waiting for the recording to start, and I know David has started it already. I've got the thumbs up. Anyway, right, this morning, to be honest, given that it's a holiday week and liquidity's been a bit sort of, up and down, as it were, not sure what's going to happen, whether there's going to be anything interesting to look on the charts. But actually, having looked at the fundamental data, I think we're going to be in for some lively price action, certainly just after 8 o'clock when we've got the PMI data coming in. But before we start, as usual, may I draw your attention to the disclaimer or risk warning that you can see on your screen. As you know, this business can be very risky, so please don't even think of using money that you cannot afford to lose. And apologies, I'm just fiddling around with my headset to make sure that you can all hear me. David, can you hear me okay? Fine, brilliant. Okay, I'm just looking down the list of attendees. I can see some of you are quantum users, so you're all welcome. Some I know are on our forex program, and I see a few new names. So for wherever you come from, wherever you are, as I said, it's lovely to have you join us this morning, and let's see what the market delivers. All right, here am I. This is me, forgetting who I am and who I'm with. My husband is sitting across me, David, and we will be looking at the markets through the prism of a volume price analysis, which is the methodology that he and I have been using, well, ever since we first started in this business trading, almost 20 years ago now. But that's only the technical analysis part. We do incorporate that into what we call a 3D approach to understanding the markets, understanding the price action, and that includes the fundamental news, the related markets, and which is equities, bonds, and increasingly, I think we probably have a fourth strand to that, and that is the political element as well. They all seem to be getting jumbled up at the moment. If you've not come across the approach that we use and that we write about, you can actually now get all of this information up on Amazon. This is what we call the box set. It's the digital box set which pulls all the strands together, and it's $9.99. I think we talk about politics in there anyway in the 3D book. Yes, we haven't. There is in drama. There's something called the fourth wall, isn't there? It's where the protagonist turns to the camera and speaks directly to the audience. So I think the fourth wall in this business is the politics, and that's quite well. And the politicians are talking to us. We've actually got politics a little bit to consider today, especially to do with China, and then anything to do with China to do with the Aussie dollar. And I've got a trade to go over with you, certainly on the pound Aussie from yesterday. So there we are. This is a slide from our forex program. And as you can see here, how this is the interrelationship between all these markets, with forex pretty much sitting at the center. And with regard to the indicators and tools that we use, obviously we have the chart, we have price, we have volume, and overlaying on those are the tools and software that David and I have developed specifically for forex. And we'll be referring to these, the CSI, the currency strength indicator, the matrix, the array, and the heat map. But the one we always start with is with the currency strength indicator. I'm just going to stop there while I take this off and move to the charts, and I'll pass over to David.
Thanks, darling, and a very warm welcome to you wherever you are in the world. I hope it's as nice as it is here in the UK. It's a glorious spring morning, and it's been warm this week, so it makes a nice change for us from the long winter months. Great to have you with us today. If this is your first time joining one of these webinars, you're more than welcome to ask questions. If they're short questions, then we will tend to answer them in the chat box, but if they're longer questions, then we'll be happy to answer them on air for you. We focus on the MT5 platform predominantly, but I've also got the Ninja Trader platform running on my machine, and we'll flip-flop between the two, just picking off trades that come along or anything else that catches our eye. And as I say, if you do have any questions, we're happy to answer them for you on either on the chat or on longer, more detailed questions on air. I will pass back to Anna, and we will get going.
And just a quick look at the economic calendar. In fact, from the economic calendar, also from yesterday, because the one item of news which has really given the market a lot of some buoyancy, or a continued buoyancy from last week, in the sense that it's a risk off, and that is the GDP number from China. Now, the Chinese data, we haven't talked about this for a long time actually. Chinese data is, shall we say, somewhat, I don't want to be careful what I say here. It has to be taken sometimes with a little bit of pinch of salt, in the sense that the number is always fairly spectacular, in the sense that I think GDP came in at over 6%, which is, I mean, any economy that can come up with that kind of number would just be, you know, to die for, as it were. Here it came in at 6.4. The more realistic figure it is suggested is probably what, 1.5% off that, David. But even at 5%, I mean, that's extraordinary. That's really important because, as you know, the other major economies, Europe, in particular Europe, was teetering on the are they in recession? Things are not looking good, and it's not all to do with Brexit. And you also have to remember, as I said, this interconnectedness that we have between the global economies is, in fact, Europe is much more dependent on China. It's their biggest export market, much more than the US. So this number was the number that's cheered everybody up from, it's a carry-on from last week, which was a very positive week for the indices, all reaching new all-time highs. And that has a spillover, it has an effect on the different currencies that we look to trade. The closest currency to Chinese data is the Aussie dollar. And it's quite extraordinary. I think the Aussie, Australia has not had a recession for 24 years, is it, David? And that is really down to the fact that it just exports everything, all its raw materials, practically all its raw materials, to China. So you can see this. The relationship, it's a very delicate relationship. You know, if one goes to, if China, really does slow down, and this is just the final hurrah in this cycle that we've got, that we're in at the moment, where things are just pushing forward, and we have a serious correction, then it's going to have an impact on the Aussie. Right, there's other Aussie data that we've had already, but this is the data that we want to talk for today, because most of us trade intraday, so we have to know, this is all great background stuff, and it's great to know all the relationships and the correlations and how they all affect one another. But today, this is what we're waiting for, 8:15. These are the PMI numbers, and we can see here, you read fundamental data in the same way that you read technical a technical chart. A nice thing about Forex Factory is you can pull it up like this, and you get a graph, you get a chart, and 50 is the line. Above it is considered an economy in expansion. Below, then things are not looking so good, and you can go back and you can see if there's a pattern, if there's a trend. As I said, you read it in exactly the same way. This is for France. The one that's that in Europe, the two major economies are the French and the German. But the German is the one that everyone will be focusing on at 8:30. So we just expand that, and we can see here it's had a steady rise, and then, you know, apart from this here, this sort of pullback here back in July last year, it has been on a pretty steep downward slope. It actually sank below 50, and last month was pretty horrendous for Germany. That's going to impact the euro. Now, does that mean that everyone's going to be selling off the euro? Well, not necessarily, because in fact the euro is in what's called a bit of a short squeeze, because the other way you can look at sentiment towards a currency is through the futures markets, through the numbers at the CFTC. And I actually read the other day that I think euro shorts are at a pretty high number. I think there's 100,000. Now, you could also read that data that when they are so extreme, you could also see a potential turning point. And it's one of these, you know, it's all this information that is there in the background that is being played out in background, and what we have to try and make sense of it, and then we look at the chart itself to see what the charts are telling us. Now, this is the chart I have of my profile for the pound Aussie, because the pound Aussie yesterday was really really interesting. I don't think I've got it on the 3 minute, because I tend to use the 3 minute chart, the Renko, and the 30-minute chart for me on an intraday basis is just it's a nice time frame to kind of benchmark. Sometimes you can also use the hourly chart, but the 30-minute chart, particularly if you've got fundamental news coming up, and also if you're coming up to a crossover, because yesterday was a classic example of really you'll see a technical setup on the chart. It's all going up nicely or down nicely. Everything is in is in alignment, as it were, for you potentially to take a trade. And suddenly you have another center comes in, and yesterday was obviously London, and the whole thing just completely reversed, literally. And you look at it and you think, my goodness, what is that all about? So not only do you have to contend with what you see on a chart from a technical, you have a technical picture, you have a fundamental, you have, as I said, the political, you have what's happening in related markets. You've got to try and judge what market sentiment is. You've also got to factor in what we call these crossover periods, and we're just coming up now to the London session. Now, what I actually started with yesterday, you can catch up on my thoughts on this over at my Facebook page. It's called Learn. Just type my name in, Anna Cooling, Learn Forex Trading, and it'll come up on the my Forex page at Facebook, and there's actually a sort of summary of what happened with the pound Aussie. And in fact, this was it here. It was at this point here, because the CSI, what we're looking for, what the CSI does, it deconstructs the market into the individual currency. So each line is a currency. So we can see whether that currency is being bought or sold heavily or not. So at the moment, the ones that is catching my eye at the moment, you look at the Canadian dollar, it's actually quite it's going into an oversold state, as it was. It's being sold off here quite heavily. You've also got the yen here, which is also being sold. You've also, as you can see here, this is the Aussie, the blue. You've got this nice little cross here. All these lines in their different positions on this indicator are giving you different bits of information about, first of all, the currency and what is likely to be happening with a currency pair. And it's always the starting point. And the 30-minute chart is just a nice time frame. It's not too far out for intraday trading, and you can say, oh right, what's happening on the 30-minute chart? Now, when you go down to the faster charts, then you'll be able to see the faster charts may be able to give you a potential point of entry. So, for example, here we've got the Canadian selling off. On the faster charts, is it still, is there a potential to join that trade, or in fact, are we looking at a potential reversal on the Canadian? And then we would go and look at what we call the matrix for that currency, all the Canadian pairs, and see perhaps where there is going to be the best opportunity. And that was also interesting about this indicator. That's just at one level, but it's a much more subtle indicator, because when the lines are moving in the same direction, you can see here, you've got the dollar and the Canadian, the dollar's moving down and the Canadian's moving down. That is also telling you that this pair is more than likely to be in congestion. There is no clear divergence. There is no strong force pulling one currency in one way and the other in the other direction. What you would probably go and look at the moment, you can see the euro being bought here on the 30-minute, and we know there's fundamental data coming, and we know there's a crossover coming up, but it's also on a cross. And when you've got a cross of the currencies, there is a trend, there has been a move underway, and which is fine, because we can't always get in at the top and as near to the top and the bottom as possible, but it's also telling you that there could be a potential for carrying on the trend, again looking at the faster time frame. So what would catch my eye at the moment? Well, the Aussie is being bought still, because you've still got the feel-good factor from China. You've actually got a cross on the Aussie Yen. The Aussie Yen on the longer time frames has been extraordinary. I think it's been the longest congestion for a pair that David and I have ever seen, David, haven't we? And it finally broke out, and it really broke out as a consequence of the Chinese data, so we can look at that later on. The pound is being sold, but what's it being sold against? Well, again, my pound Aussie, we've had a cross on the pound Aussie. So the 30-minute, as I said, is giving you so much information that you can then take and apply to whether you trade a particular pair or you're just like us, you're just scoping out a potential opportunity, and you're not really, you're not tied to one or two or even three pairs that you like to trade all the time. And also what this indicator tells you, it tells you when to stay out of a trade, because if you are, say, I don't know, you just like to trade a euro dollar, maybe one of the other euro crosses, maybe a euro yen. The euro yen looks like it's on some kind of on some kind of move at the moment. It will tell you, is there going to be a potential for a trade in the faster timeframes? And what you don't want to see is when all the lines are here, as you can see, all clustered in the middle. That is a point where basically nothing is happening, and maybe liquidity has temporarily reduced out of the market for whatever reason, and we just have to wait. We just have to wait for this divergence that drives the forex market. It is a market of mean reversion, and what we do is, as intraday traders, we trade these oscillations. We trade basically when we wait until the something is oversold, and then we look to buy, and we wait until something's overbought, and then we sell. It's very straightforward on one level, but there is a world of complexity behind those moves. But once you understand that complexity and you can tease it apart, it all really does begin to make sense on the charts. And of course, with volume price analysis and in our humble opinion, with our indicators, you really do get an enormous edge over the vast majority of traders that are out there. Right, that's what I want to say, David. David, can I pass over to you now? Have you got something up there on your screen? I'm going to have a look at the Canadian, see what's if there's how much more of a sell there is on that. And clearly with the euro, but we know the euro has got some news coming up fairly soon. And that is a decision you also have to make as an intraday trader. With these important items of news, do you actually look to take a position ahead of the news, or do you wait until the news comes out? It's a bit like an FP, and then perhaps trade the reaction to it. Do you, and if you're in a trade now, if you've been on a buy on the euro dollar, do you actually come out? There's a lot of decisions, and as I said, so any trader that says to you, no, everything is it's in the charts, I only follow what the charts are, and they never pay attention to any of these other factors, is lying. So I'll just pass over to David. Can I move my screen over to you as well?
Just switch screens. You should be able to see mine now, hopefully. I've got Ninja Trader up. Just move the chat box out of the way. I'll slide that down there. Interesting, Anna picked up on the Canadian dollar, because that's the one I've been following on the Aussie CAD just while she was talking over the last 10-15 minutes or so. Just to give you a heads up on the time frames, basically along the top we've got the 1 minute, the 5 minute and the 10 minute. And down at the bottom, we've got the 30-minute, we've got the Renko running for the same pair, and down here we've got the daily. So we've got a complete array of time frames. And really, what I wanted to highlight were several aspects of this, because there's some really nice VPA lessons in here as well as using multiple time frames and the indicators also. If we just start with, let's just head back to the CSI for a moment. There we go. I've got this. That's on 15. This is on 5. Now, sorry, I'm just going to switch off for a moment because I've got echo on my headset. Hold on a minute. Apologies. I think that's a bit better now. Anna mentioned the Canadian, and you were looking at it there on a 30-minute time frame. But what is actually delivering right now on a 5-minute time frame is that reversal. We see it get to very heavily oversold on the 5-minute time frame, and now it's rising very strongly. And equally in terms of the Aussie's got into overbought, and that's starting to sell off. You can see the euro here, that's the same, that's starting to sell off. We've got very strong buying in the Swiss franc at the moment, and we've got very strong selling in the Japanese yen, this magenta line. And the reason I highlight that is because what's happening on a 5-minute time frame may well be very much at odds with your perspective from a 30-minute time frame or an hourly time frame. Because what you're seeing on the 5-minute time frame, or we could run this on a 1-minute time frame, where you see all the oscillations, and you could even go down into seconds. Indeed, last week when we were running the index webinar for the US sessions, because the market was very lackluster, it was very lethargic, I actually went down onto a 15-second chart on Ninja, because you can do it. You can go to 5 seconds, you can go to anything you like. But we were running on 15 seconds because the market was very compressed. But even so, on that very fast time frame, there were opportunities, because the more sluggish the market, then if you're going to pull trades out, you've got to go to a faster time frame and faster, and so on and so forth. That may not suit your temperament. It may not suit your trading style. You may not be comfortable with taking myriads of trades in a day, but that is basically the philosophy. If the market is in congestion and very tight, then if you want to trade that market, you've got to go to a faster time frame. And what we're seeing on the 5-minute CSI is really just a reflection of the fact that the market is constantly, the forex market is constantly in a state of mean reversion across all the time frames. Doesn't matter which one you look at, you're going to see reversals all the time. Now, you as a 30-minute trader or a 60-minute trader trading the Canadian, for example, may well be comfortable continuing to hold that, because what you're seeing here is nothing more than a minor reversal or a minor pullback, perhaps in the longer term trend. If this does develop into strong buying for the Canadian dollar longer term, then what you will see is you will see that ripple through the time frame. So it'll start in the fastest time frame of all, and then gradually that buying of the Canadian will ripple through the 5 out to the 15, the 30, and so on and so forth. And that's what you're constantly faced with. It's the issue of segmenting out the focus of your attention in terms of what you're doing at that particular point, and ignoring everything else and just focusing on that, because I guarantee you look at a slower time frame and it'll tell you a different story completely. So it's hard. This is not easy, this game, but that's what you have to do. You have to segment out what it is you're trying to do and stay in focus across a particular slice of time, and not wander off into slower time frames if the trade isn't going with you, to try and give you confirmation of what you expected to see in your faster time frame. If we go up onto 15, just to make the point, you can see here, this is the Canadian dollar down here. It's been flip-flopping around in oversold for some considerable time. It's another facet of currency markets. The currencies can stay overbought and oversold for long periods. It doesn't automatically mean that once they get into oversold or overbought condition that they're actually going to reverse nicely for you and give you nice strong trades. For example, the euro here did. It got down here, didn't quite get to this region. Now we're seeing some strong buying on the euro, and we've got news ahead coming up, so that may well impact that, good or bad, however the fundamental news pans out. But that's the point. And now we're starting to see the Canadian flick up on 15. So what we're seeing on 5 over here, this buying of the Canadian dollar, if that is to continue, then over on 15, this has got to move well away from this region. But ultimately what we may see is just this condition here where we roll back into overbought before we start to see that strong trend begin to develop. Now, if we go back to the charts, let's go to the multiple time frames again. Just pop that down. As I say, I've got 1, 5, and 50. Sorry, I've got 1, 5, and 10 minute across the time frame, and there are some interesting aspects to this. The first of all, if we start with the 5 minute, there's several aspects here. First of all, we had the volatility triggered here. This was overnight. This is 2:30 our time, so this is middle of the night for us. Just to put you in context, this is where Europe's opened at 7 o'clock, and this is 8 o'clock here, so we're just coming up to London in the next 3 or 4 minutes. In terms of volume comparison, we can compare volume through this region because we're in Far Eastern Asia, and now we're into Europe. We can compare volume across this particular slice here. We had the volatility. It's what we expect to see. Whenever we get volatility, price action moves outside the average true range, we expect to see market at the very least compress, moving to congestion phase. And it's part and parcel of the insider participation. The market makers are participating. You can see it here reflected in the volume. It's massive. They're in here, the prospect of reversal is pretty strong. It's what happened, came up here, and now we're reversing back inside the spread of the candle, and we're still trading within that spread of that particular candle. But in terms of the what went on in terms of the 10-minute time frame, let's just pull that up and move up into Europe. This is Europe here, 7 o'clock. We saw this rally here, but then what we saw was this weakness coming in. And whenever you see high volume, we had an effort to rally. The candle, the price action tried to rise. It fell back, closed pretty much near the open. Good strong volume under that particular candle. You know for a fact that whilst this market may not be ready to reverse, it's certainly going to reflect weakness. In other words, your anticipation, your expectation is that the market is going to, at the very least, move into congestion phase. It's not going to carry on through because this is just signaling weakness from a VPA perspective. We've got a weak candle from price action and we've got strong volume underneath it. So it's telling us that we'd like to see a reversal into a congestion phase, which is indeed what we're seeing. Now what we're seeing is a reversal, the possible move higher from this region. But what we also saw on the 1-minute candle, excuse me, which gives you so much information. First of all, if you look at the trend monitor, for example, this is the trend monitor, this is on 1 minute. What it's giving you is an instant heads up as to the sentiment in the fastest time frame and whether that is going to ripple through into your slower time frames in inverted commas. In other words, your 5-minute, your 10-minute, your 15-minute, and so on and so forth. We also had the volatility triggered here, again on good volume, so we're expecting the market to, at the very least, congest, which it did, and in this case it rolled over. And now we're starting to see some strong volume coming into this market again. We've got a nice widespread up candle here, good strong volume under here, and we're seeing the trend monitor start to transition. But in terms of the 5-minute time frame, you've seen no transition at all in terms of, let's just pull that out a little bit wider, there we go. In terms of the trend monitor transition, it's just remaining steadfastly blue for the time being. In other words, in the 5-minute time frame, we're not seeing a transition through to a longer term trend reversal. What we're actually seeing is a minor pullback for the time being. What was also interesting about the volume perspective in terms of this little rally here that was going on from 7 o'clock, we had rising volume. And then as we get to the top of this, we start to see falling volume. So from this point onwards, we're starting to see falling volume on these 3 candles. So we've got rising price and falling volume. And then we start to see high volume on this candle, which again is signaling some indecision, some weakness. We've got, in other words, we've got a lot of volume being driven into the market, but it's not following through in terms of the price action, because if that were valid, in other words, not an anomaly, if price and volume were in agreement, what we would expect to see is certainly based on this amount of volume, looking at a benchmark candle, if you will, previous volume in here, what we would have expected to see with this candle should have closed up here, and it hasn't. It's closed with a decent wick to the upper body. So what we're expecting in that case is to see, as I say, congestion, possibly a reversal, which is what we actually saw. Now what we're seeing literally as we move into the London session, we expect to see much higher volumes come in because the London session is the deepest liquidity. And we're now starting to see 2 sessions run together, Europe and London. What we also expect, which appears virtually without, virtually almost every single day, is as market sessions appear and we have session crossover, you will often see reversals in sentiment. So if you've seen a currency pair rising prior to London, it may well reverse, move in the opposite direction. You also see this a lot, particularly at the US session, where perhaps the dollar's being sold in the London session, the US session opens and the dollar starts to be bought quite strongly. You see that a great deal. It's something that most forex traders are totally unaware of in terms of session crossovers. But as I say, what we're seeing here, we're now starting to see this volume come in and some weakness on that particular candle. If we go back to the 1 minute, what are we seeing on the 1 minute? And I would urge you, if you're a little bit shaky in terms of VPA and you want to learn volume price analysis for yourself, then the best place to practice it is really to go to a fast chart, because that is where you will see it developing in real time pretty quickly. and you can apply all the same principles, whether you're on a 1 minute chart or a 1 month chart. The same principles of VPA apply. What have we got now? We had a 2-bar reversal here, so if we overlay that candle on this one, we've got a 2 minute up thrust, decent volume under that candle. Also starts to bring in some of the other aspects. We've got some price resistance overhead here. This is this dash blue line is on the accumulation distribution indicator for NinjaTrader. It's basically working on price. It's laying out those levels of potential resistance or potential support purely based on the price action. And it's very sophisticated in the way it works, because the thicker the line, then the greater the number of times that particular region of price has been tested. Now, in this case, you may not be able to see it, but this is a 5. This has been, in other words, this level of price here has been tested repeatedly 5 times. So it's now acting as resistance to the move high. You can see here, came up, tested it, and now it's come off again, and it's back down to the volume point of control, which is here. Below us, we've got a less strong region here. This has been tested 4 times as a platform. If we go down to test that, then that's got to see volume to drive through there. Below it, we've got these minor levels. These have been tested once, and this level down here has been tested twice. Support and resistance is all part of volume price analysis, but using the indicator, this is the accumulation distribution on NinjaTrader, but for those of you who've got the MT4, MT5 platform, it's exactly the same principle. It's the dynamic support and resistance indicator. In that case, it works either on the dash line or it prints in a solid line where you've got stronger areas of support and resistance working. The other thing that this chart is also telling you is that we're trading around the volume point of control for the time being. So you expect congestion. In other words, the market is, this particular pair is in price agreement for the time being. The volume point of control, the yellow dash line, signifies the greatest density of volume on the chart. You can see it here, it's right out to here. So this is the region where price, time, and volume have been in consolidation for the longest time. When you're looking at volume and price here on this vertical relationship, you're looking at it from the perspective of purely volume and price. When you move to the volume point of control here, what you're actually doing is bringing in the time element, because what the time element does, it then displays the volume profile, the volume histogram of all these regions of volume up and down the chart. In other words, where the price action is likely to run into difficulty or find an easier path through the price action. Because you can read volume in exactly the same way as you would read price, support, and resistance. So where we come down to these low volume nodes, we've got low volume up here, we've got relatively low volume here. So when the price reaches those areas from a volume perspective, you would expect it to move through fairly quickly for 2 reasons. First of all, the market's not paused there before, so the market doesn't consider those regions as important. Secondly, because there is light volume there, then you would expect the market to move through pretty quickly. And that's the anticipatory nature of trading. It's trying to anticipate what is likely to happen next. And the volume point of control delivers that from a volume perspective as opposed to a price perspective. But using the 2 indicators in conjunction, you've got both on the chart, so you have all the information there. Just pop that down again. So see what's going on in terms of 5 minutes. Okay, we've got a kind of 2-bar reversal here, not quite as clean as the other one, but certainly some weakness there. You can see there we've got more volume coming in. This is 8 o'clock, so we've now got the first 5-minute candle, and then we've got our second one will be building shortly. The reason that the volume is not displaying under here is because I've got it switched off at the moment. On NinjaTrader, you can toggle it on and off to either show on the as it's building real time or when the candle completes, and I've just got it off purely because I've got so much data coming in. Plus we're running a live webinar as well, so I just want to make sure that that's the case, that I don't slow the system down. But what we're seeing right now again is weakness starting to develop, and you can see that also on the trend monitor. The trend monitor was bright blue up until this point. It's now starting to pick up on the fact that this trend is getting pretty weak. It's starting to develop bearish tendency. And that's what you see in terms of the transitional colors. We've gone to dark blue. We've got a dark red appearing now. Sometimes it goes straight through into red. Sometimes it doesn't. You can see here we've had transition here on the 1 minute. We didn't have all the transitional colors here. We went from bright blue into dark blue, no dark red, went straight through into bright red on that particular occasion. So it really, and the reason we developed this indicator was for one simple reason, because the biggest problem everyone faces in trading, whether it's forex, doesn't matter. It's the issue of staying in a trend. Once a trend's underway and you've got a decent position in the market, you want to hold that. You want to maximize it for the absolute best return you can, because it's hard enough getting into a good position. Once you've got into one, you want to squeeze every single last cent out of it that you can. And the biggest problem is we are then faced with emotion, because as soon as we're in a good position, we start to stress about the fact when we see the market moving against us and that position starting to dwindle away. We've seen profit in the account. We've already banked it mentally. We thought, fantastic, we've got $100, $200, $300, $400 worth of profit in there, and then it starts to filter away. And by the time you've lost maybe a third of it, or start to get down to 40 or 50% of it, the emotion is riding really hard, and you are going to close out and take your profit. You think, okay, I'm going to take what I've got. I've lost 30, 40% of what I had, which is painful, so I'm going to close out now. And inevitably what happens is the market then moves from a pause point to continue in its original direction. Not always, of course. That's down to your skill as a trader, reading all the indicators, reading all the VPA, and applying a multiple time frame approach. But inevitably that's what happens, because markets never go up and down in a straight line. And that's why we developed the trend monitor, to try to help to remove some of that emotional response that you always feel when you're in a trend. And it takes a more considered view of the trend development, the sentiment of the trend, to try to help to keep you in through those inevitable pullbacks and pauses that happen in all markets and all time frames. Let's just go back to, excuse me, I'm just going to switch off for a moment. Just go back to the CSI again. Let's go back to 5. And we were looking at the Aussie CAD. And you can see there, we're starting to see the CAD is flattening off. The Aussie, there's no great strength there. The pair that will really be moving right now is certainly the euro. Some strong euro selling. That's probably ahead of the news. Has the news actually come out yet? I don't think it has. It's due in 8:15 our time. So starting to see some pretty strong selling of the euro. And we've got some decent buying of the yen here coming in as well. Head up to 15, and you can see that starting to reflect on the 15-minute time frame from the euro. So if we just change these over to, let's have a quick look over at the, oops, sorry, let's go back to the multiple time frames. Let's put the euro yen in here, just take a quick look at that, see what's developing there. And this is all ahead of the news, so it's likely to be volatile. You can see we've got a volatility triggered here, trading inside the spread of the candles, what you expect to see. We've got the volume point of control here, so lots of volatility. That's on 5 and that's on 10. Decent volume coming in there, starting to develop. But as you can see, we've got the volume point of control is pretty much aligned on all 3 charts. So what we expect is congestion. This market is not going to break away from here from the time being. It's probably going to wait for the news. When the news comes out, then sentiment will develop, and then we will see a strong move away. And as we see that move away, either to the upside or the downside, because at the moment the pair is in price agreement, you can see here below we've got a very, very, very strong platform of support here on 1 minute, this blue dash line. So if the market is going to move to the downside, then it's going to have to go through there with some serious volume. To the upside, not a great deal in terms of price resistance. We've got a little bit of here and very minor here. But we've got some very, very strong volume to get through in terms of that particular time horizon. But to the downside in terms of volume, it's very lightweight. So if we get through this region, then we're going to slice through this area pretty quickly. But the key is this level here, certainly from a 1 minute perspective. And you'd be looking at that in all the other time frames as well. You can see here we've got it on 5, not so well developed on 10, but we are trading around the volume point of control for the time being. That's what you expect to see ahead of a major news release anyway. Can I pass back to you, darling? Oh, right, okay. Let me just let's just go to the indices. That's okay. These are the three primary indices which give you an instant heads up on what is happening right now. That's the yen index. These are all on 5 minutes, so these are all pretty fast time frames. We had some decent selling on yen, starting to see a little bit of buying going in, but there's no great strong trend developing there for the time being. This is on the dollar. That was selling off early doors, but now we're starting to see some buying coming into the market, certainly once we've got through this region here and through this level, which we're now testing. So we're starting to see some buying coming in on the dollar. And in terms of the euro, this is the euro index, again on 5. It really reflects what's going on ahead of the news, which is what you expect to see: a congestion phase building, volatility building, and then we'll start to see a break. And then it's down to analyzing the volume perspective, checking out the levels, what's going on in terms of multiple time frames, and is this going to develop into a strong trend based on the fundamental data as it's released. So I'll keep an eye on that one. Let's just go back to the euro yen. Well, and again, if you're not familiar with VPA and through news releases and all the rest of it, it's a great way to consider a chart as the news is released, to watch the reaction of the market makers, because every single opportunity throughout the day is never missed by them. They will take opportunities to trap you into a weak position if they can. Volume will reveal whether it's true or not. A false move, in other words, or whether they are actually participating, which I'm sure they will when the news is released. And then it's a question of identifying the opportunities available and trading them if you're trading the news as an opportunity. But what volume will reveal is the truth behind the price action and the best time to get into that market and follow what the market makers are doing, because volume reveals their activity. It's as simple as that. I'm just going to pass back to Anna for a moment.
Okay. While David was speaking, I've actually got the euro dollar up on my profile. I've actually got the 10-minute CSI here, and we can see the move that's been developing on the as you can see on the 3-minute chart. And this is what I meant. This is what I was saying. You know, you would see this. We've had the London Open. It's great. You know, great. Oh, fantastic. On the 3-minute chart, it's got it's around the volume point of control, but because the market is waiting for this news, I think it's obviously come out. This is the kind of decision that you have to. Well, first of all, you have to be aware of the significance of the news releases, and there's also something else about news releases, and that is. With Forex Factory, all the economic calendars are great. They give you some idea of the impact that a piece of news is likely to have on the market, which is, as I said, which is very helpful. However, just because a piece of news release is given a high impact status, it doesn't always mean that it is going to hit the market in a very impactful way if that item of news is being disregarded by the market because it's, you know, because of the economic cycle and the business cycle. Just to give you an example, until very recently, what, about a year or so ago, 18 months or so, until the Fed started to seriously raise interest rates, whenever the interest rate decisions were coming along, they're all flagged as tier 1 red flags, high impact. But honestly, the market knew that, you know, interest rates, they weren't going anywhere. They were going to stay where they were, if not going down. So yes, they might be given a red flag and classified as high impact, but they're going to be only high impact if, first of all, the market considers them to be high impact, and secondly, do they, you know, where they appear on the particular economic and business cycle. So this is the first of the PMIs. This is the French one, which is you know, no disrespect to the French, is important, but it's the German data that will really carry the you know, the weight, will affect the market. Now, what's happening from a trading perspective is this. Let me just bring up the. It came in a bit worse. What was that?
Services came in a bit better. Manufacturing came in a bit worse.
Yeah, and we, as I said, and given what we said earlier about China, and that China is of huge importance to the European export market, you would also read that, take that into consideration as well. And you also have to remember that the Chinese data, though it looks absolutely lovely and it's been polished to within an inch of its life, there are, the market has a somewhat jaundiced, takes a somewhat jaundiced view of the numbers that come out. In fact, just as an aside, I think there are the other way they measure Chinese activity is they literally from space. They look at the number of factories and whether the lights are on or off, and there's other ways of trying to make sense of these of the numbers that are released by the Chinese government. And they're because of their economic model, they have to come up with good numbers, as it were. It's a model that they've adopted to bring as much economic growth to the Chinese population, but it also involves a huge amount of, the economy is very carefully managed. Right, so what are we seeing here? So we've had a little, go back to what we were looking at earlier. When we looked at that cross on the 30-minute CSI, we're actually looking at this level here at 12.92. We can see here we had some effort to rise, then we had a pullback. Now, the other thing we have to remember with volume is that you have to read it in its relative in context to the session that is currently underway. And you can see here all the volume bars have been really squashed down because of the volume that suddenly rushed into the market on the first of all of London, and now we have the release of the news. Now, when this volume wasn't there, this did not invalidate these the histogram that you see here. You just have to first of all bear in mind that this was in the Asia session, the beginning of the Europe session, and which is why it's all been reduced. It's the participation level. There just aren't there are not as many traders in this particular time zone, but it doesn't invalidate the analysis of using price with volume. It was a lot easier back in the day, I have to say, when it was 24 hours, it was a fixed open, a fixed close, and it was all much more sort of consistent as it were. But we don't, the world doesn't work like that anymore. We do have these 24-hour markets. So what have we got at the moment? We have we have horrible, I won't say horrible, we have volatility, as you would expect, a lot of racking about. It's still around the volume point of control. This is what's going on here. But to go back to what I said before, where we had that cross, it was this bounce off the 1292 level. It corresponded with the cross on the 30 minutes, and this is the sort of little trend that we saw higher. I'm just going to expand this because I explained it. There we are. If you can see the volume bars, you can see here, if you look at these little volume bars here, like I said, completely distorted by what's going on at the moment, but everything is fairly consistent, got a nice little move up. Then you have these two little down candles here, and you have to read what the volume says underneath it, because at that point you say, well, maybe is that move coming to an end and I'm going to get a reversal, or is it just a pullback? How do you know it's just a pullback before the move carries on high? You look at the volume underneath it. Underneath the two candles, two little down candles, you can, first of all, they've got wicks to the bottom of the candle, which tells you that there is price support at this higher level at 12.96. But look at the volume. One is lower than the other. So that kind of tells you, this is just a minor pullback, a secondary trend before the primary trend is, resumes, as it were. And we have a very similar situation we have here. In fact, we have buying coming in under the hammer candle, and because we're coming up to we know we're going to be running into the London session, and if you caught that little move there, would you possibly come out at that point? Yeah, it's pretty much it's how you tolerate It's it's what your emotions can cope with. It's down to your temperament, what you can cope with, and how confident you are in reading the candles and the volume. What also helps is having a non-time-based chart. This is the little move that I'm talking about here. This is the Renko. This smooths out all these pullbacks and the noise of the market. You can see the price action preceding, which is horribly choppy and whipsawy. But within that, you do get these reasonably smooth runs, not as smooth as this one here, as we can see here. This is the little pullbacks. And with the Renko, this is actually set at quite a fast Renko. I'm using the ATR version of the indicator, which I basically left it to the system to decide what the brick size should be. So I've not had any input into the values. Then you can, with this indicator, you can do it either way. So you could set this to 3 pips, 5 pips. Somebody wrote the other day and asked, could they use a Renko one to kind of really smooth it out and on a daily? It doesn't work on time. It works on pip value. So if you wanted this to go over a very long, a long period of time, a bit like the old point and figure charts, the one that looks like circles and crosses, you could set this to 20 pips. It's up to you. But if one of these isn't going to form until 20 pips has gone through the market, you're going to have to be very, very patient. And it has all sorts of implications for stop losses and what have you. But generally speaking, the Renko charts, as the tick charts, they tend to be used for the faster timeframes and to help smooth out the noise that you can see on the time charts. And you can see here the way, because we've got, we're seeing the price action because of the news at the moment. The way we've developed this indicator, as I said, gives you the fixed option, fixed value option, or the ATR version. With the trend dots that you see here and the trend monitor, they really work very, very well in tandem. The dots are obviously red. Grey is for it's congestion or consolidation or no clear direction. But really, when everything lines up in terms of the bright blue or the bright red, there is a potential for a trade. But you have to also look at what the time chart is doing, because this is also a very, very heavy consolidation period. So you don't look at it in isolation, you also look at it on the time chart. Now, what's interesting here with the time chart is we've got this ton of volume coming in. You've got volatility there, then great big wick to the top of that candle. The first reaction is straight back into the spread of the candle. Now it looks as though it wants to have a pull away from the volume point of control. It's a volatile trend. In our program, we talk about trends. We talk about a trend without volatility, a nice smooth trend that we see here, or a trend with volatility. Both are tradable, but clearly the risk on those trades are very, very different. The risk profile is very different, and also where you would put your stop would be very, very different, because in a trend with volatility, a very spiky trend, either up or down, you're going to get a lot of whipsaw, and you're going to be stopped out a lot more, many more times. Now, what's interesting here is got this attempt, seeing this attempt to pull away. We've got another 5 minutes before the German PMI data comes out, and we just have to, what's to say what's going on? We'll have to wait and see. From the volume perspective, there seems to be a lot of price support coming in here, and the selling pressure is not. These volume bars have to be much higher to sustain this downward move. Now, they may come in as soon as the news is released. We will wait and see. Now, what the Renko does here, this is why you get this change in color all the time, and it will also help to explain what is going on. And you can see here it actually changes in real time. We always get questions about this. Does it repaint? Well, no, it doesn't, because what it's doing is it's certainly on the Renko, which is purely price based. It is actually telling you what is happening in real time. It's picking up those very granular price action that is going on at the moment. It's very red. It has to decide this in between color that we have here. between the bright blue, as I said, this it's not quite bright red, that there isn't enough of a selling pressure to move it further down. And in fact, if we look at the volume, you can see that. Yeah, you can see that. That first of all, that should close down here as a down candle. You've got a wick to the bottom of the candle, which tells you there's buying coming in, and that is what is being picked up on the Renko with the trend monitor. So it depends how confident you feel overall in trading through these releases. There are traders who do. I won't pretend that they're not, because they understand what they're seeing on the chart, and they say, hey, you know, when you get volatility is the compression of time. You know, things happen much more quickly. So if you can get a trade on, or you put a limit order in, then, you know, it's, as I said, it's pretty much what your temperament is and if you feel comfortable with it. Now, what's happening on the 30-minute, go back to my 30-minute, this is interesting because we've had a volatility candle triggered on the 30, and we're coming up to 8:30, and it's quite a coincidence, quite an unusual occurrence today, because we had a news release at 8:15 and we've got one at 8:30 for the same you know, the same data, which doesn't, I never see, that doesn't normally happen, does it? And obviously the volatility was triggered on the previous one, and we know what happens with volatility. Price will retreat to within the spread of the candle, and it's at the volume point of control. There's a lot of factors going on here just on the price action, you know, let alone you know, the fundamental drivers for what we can see on our chart. So as literally, I'm waiting for 2 minutes. It's paused. You can see the support coming in here, and if this, once it closes off, what we can expect: retreat first, straight back in there, and then the direction will be established, and it may be determined by what, as I said, what the German PMI data is. And again, we have here, we've got this sort of consolidative look at price action, but you can see this, you know, this doesn't want to fall at the moment, and there's not enough volume underneath it to actually drive that further down. And as David said, you know, looking at watching this price action during these periods is just a great way. And you think, you know, if you haven't bought the book on Amazon, I do, you know, for $4.99 on there's the forex for beginners, which is volume and it's forex centric, as it were, but the complete guide, a complete guide to volume price analysis, really kind of lays it out, and you just watch the charts and, you know, see what the reaction is. It's fascinating. David, anything you want to say about this? Here we are. Must have come out. There we are. So what did we have? Yeah, so we have, you can see here, straight back in there, straight back into the spread of that. Now we've got another volatility candle. Gosh, it's either...
PMI was worse than expected.
Yeah.
44.
Yeah.
Services might be.
There we are. That's the Renko taking off. Yeah. And what have you.
Services was slightly better. PMI was slightly worse.
Okay.
Manufacturing.
But this is what I was also going to, what I want to stress here is the fact is we look at that volume profile here and we say, yeah, there's price support coming in. It, from a technical perspective, it's a nice setup. You think, oh, you know, nice potential reversal. It's not going to go down any further. This was just we're going to carry on actually the trend, the move higher that preceded it in the previous session. But because we have this piece of news, and it's very important because of the you know, the PMI data is hugely important at the moment because, you know, the threat of a global slowdown, etc., yada 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 yada. This is what you have to be aware of. It is what makes this market so tricky, but also so fascinating. Now that's that one. Let me see on the CSI. Have you been watching the pound yen over there now?
I must admit I haven't.
I haven't. Okay, doke. Now we have, what have we here? This is the 10-minute CSI, and this is what we mean by a strong divergence. We see here this is the fall, and we've got this little cross here on the dollar as well. Now, when you have one of these fast and furious moves, the next thing is, well, where's it going to go? You know, what's it aiming for? What is the target? And this is where as our hierarchy of levels come in. Now, some people use Fibonacci, other people use all sorts of different things. We use Camarilla, and it's always really interesting to see the S4, the fourth level for the Camarilla protocol is a very key level, because a clean break below with lots of volume is always considered to be a genuine break. And it's the S4 and the R4 is where price nearly always tends to aim for and tends to pause, and we've seen the same reaction here in this candle. Now, the way this indicator works on the 30-minute chart, this level will refresh at the end of it's updated every 24 hours. On the hourly chart, I'll just move on to the hour. Here we are here. You can see we don't have the S4, we have the S3. And that's because the values that are on the hourly chart up to the day, they change on a weekly basis. And it's really useful to know, because, you know, as I said, they are levels that are going to be significant for the whole week. And on the weekly chart, they stay there for the whole of the month. And we've actually gone for 6 levels, not 4. There we are. So if it gets through there, where is it heading next? Well, that's the next logical stopping point here. What often happens with the S4 and the R4 is it will come through and go back and retest, and that sometimes is a nice potential either re-entry or an entry point. So just because it goes through, first of all, we have to wait that it actually holds, breaks and closes below, look at the volume underneath it, and if that's going to carry on lower. It doesn't always happen, but it's a target, it's an objective. And what also helps you keep you in is this. Now, you could argue, you could go back and say, well, actually, you know, look at that there, all that volatility that we've seen. We've got this huge volatility now here because because on the time chart, you could argue, say, well, okay, it went there, and you could say, yeah, that's it, and see how far that's going to go. And because the Renko doesn't care about time, all it does is look at the price action. And in fact, is it going lower here? Let's have a look. Let's have a look at the 30. This is the key one here. Let's have to wait. And in fact, we've got to wait till what is it? This is the 30-minute chart. Let's have a look. See on the 10-minute. Yeah, we've got another one. That's what I meant about the S4. There it is there, and it stays there for the rest of this session. And it will refresh for tomorrow. And mind you, the market's open tomorrow on Friday, David?
I think so.
Yeah. And everyone will go back and say, well, you know, really bad data, it's bound to have sold off. Well, no, not really, because markets, you know, don't always necessarily, you know, bad data, bad for the market, good data, good for the market. It doesn't always work like that at all. But all I would say with the euro is that, as I said, the CFTC numbers, there's a lot of shorts on the at the CFTC, and any pullback to those shorts would just be considered a sort of massive short squeeze. So we're going to watch this. Anything else you want to say to that, David? This one? Yeah, sure. Don't worry. Have you got this on a second chart or something?
No, just on the matrix.
Oh, and all I was going to say now is you say, well, you know, you've missed. Suppose you've decided, right, I'm not going to take part in this. What am I going to do? How am I going to, you know, this? Because one of the things with traders is we see these, you know, we've sat through. Let's have a look. See, you sat through that. I mean, you see how all the compression. You say, oh, well, okay, so that's a grind. That is, you know, nice, but it's nice steady price action. Then you see something like this. Your first instinct is, oh, I've got to jump in, got to jump in, got to jump in. What am I going to do? What am I going to do? And this is where you really have to be very, very calm and just hold back and really just wait to judge. Is this move going to carry on lower, which it may do, and you have to use one of the other charts to see where is the point of re-entry. And in a big waterfall, if this is going to go into a big waterfall, what you want is, you don't really want to see a candle with a wick to the bottom. What you want is a candle where it'll be a down candle, but it's got a big wick to the top, because that is selling pressure. And here we have some price support coming in, and we've got volume falling as well. And you've got, you know, as I said, with the CSI, if we move here, let's expand this. Where's the euro? Let's move down to the 5 minutes and see. Yes, you can see the overextension. Now, the question is, is there going to be enough of you know, when that sort of turns up for what we call a reversal trade? Now, what may happen instead is it'll calm down after volatility. Everything calms down. We'll go into a consolidation phase, and perhaps a signal will come in, and you can take, as I said, the fade. As I said right at the beginning, this is the decision you have to have. You have to sit through this. Oh, it's such fantastic price action. I could have been in there. I should have gone in there. That's what we all tell ourselves. But we just have to be very semi-detached about it and say, yeah, really interesting. Look at how the market's manipulated, how our emotions are manipulated, and say, yeah, I'm going to rise above that. Anything else you want to say, David? Move over to you.
Yeah, very quickly. Just going to hop over to NinjaTrader very, very quickly. I know we've gone over time, so I'll be very brief. Should be seeing it coming up now. Basically, just what I wanted to highlight. I've got this is the matrix running alongside the CSI. So we've got the CSI on 5 minute. We've also got the currency matrix here. And what I've done is I've isolated out the euro, because what it reflects is really, where are you seeing that strength in terms of euro selling and the best opportunities? And you can see them down the bottom here. You've got euro, yen, euro, dollar, euro, CAD. Those are the strongest trends, and that reflects what's happening on the CSI. This is the selling in the euro. This is on 5, and you've got the Canadian, you've got the dollar, and you've got the yen. These are all climbing. So you're seeing strong trend there on 5. What you're also seeing in terms of the matrix, these guys in the middle here are ranking mid-table, because the euro and the Aussie, these two are moving in tandem. In other words, there isn't a strong trend there. And the same is also true of the euro and the Swiss, this one here. It's not joined down here. It may well join, but the only reason it's going to join down there is if the Swiss franc, for example, reverts in the opposite direction, and then you will see a strong trend, and then you will see these guys moving down. So you'll have a complete array of strength or weakness in a particular currency. If you just go over to the currency array, that's also reflected here. This is on a different time frame, slightly slower. This is on 10 minute. But again, it picks out, it highlights where are the strongest trends. You can see them visually on the array. This is the strength of trend. This is euro, Aussie, euro, yen. So we're seeing the strongest trends on those two pairs, and the weakest trends are up here in terms of euro pound and euro CAD. And you can see them sitting here mid-table in terms of the ranking ladder alongside. So you get a complete picture of why currency pairs are moving in the direction they are, why some are moving strongly, why some are moving less strongly. And in terms of the currency array, you're seeing the strength of that trend displayed graphically. And also what you see in the ranking ladder here is these little flashing symbols coming up, OS and OB. We haven't got OB up here. We've certainly got OS down here, which is when the currency pair is starting to approach potentially oversold positions. And these are potential, when they flash to bright red, these guys down here, when they go bright red, then that is when they've reached a potentially oversold condition. And as Anna said, potential for a reversal opportunity, fading, trade the fade, whatever you want to call it. But you know, that's hunting out reversal opportunities. So this is looking at it from a currency perspective, a pair perspective, in other words, whereas on the CSI, we look at it from the perspective of the individual currency itself when they're reaching potentially overbought up here or potentially oversold down here. Just wanted to show you that. I'm going to pass back to Anna because I've gone way over time.
It helps if I put my microphone on. As I said, if that wasn't enough, at 9:30 we have the retail sales, which last time came in at minus 0.3. I think it was also Brexit. Everyone was fed up and didn't want to spend any money and what have you. But the retail sales for the UK, that always produces some interesting price actions. As I said, a lot going on, and then not much until we've got the Canadian sales, and then we've got US retail sales, and then it really kind of goes off into, then we really go into the holiday sessions, as it were. We're back at 1:45, aren't we? 12:45. So we'll pick up on what's been happening, certainly with the euro, and this is exactly my point. On the 3 minute, is it? the volume reducing, consolidation, and this is where you really do have to, as I said, don't be spooked by the price action that you have seen, and first of all, don't be upset that, oh my goodness, you've missed it, and just sit there and be like my husband David, as a fisherman. He just very lots of patience. Not like me at all. And this is the S4, as you see here, hasn't, well, we've got another 20 minutes or so, it hasn't actually closed below it. This is the buying that we're seeing here. The spike at the bottom of this candle on the 30-minute is now what we're seeing, this little reversal trade. It might be, listen, if it's your thing, if you're just looking for a few points, a few pips, it could be your thing, or you could say, no, you really just want to wait till calm down. Maybe the euro is not your preferred currency. You could, maybe you prefer more the pound. The Renko, interestingly, is just saying, it's not showing anything. It's still showing downward move. That's also calmed down. You can see the bricks are sort of going all over the place. And as I said, this here, you've got a little bit of volume underneath it. Is that enough to going to be push it up? This is all distorted. This is a lot of selling under here. So is this just a pullback? Some traders would say, yeah, I see that as a pullback, and I want to enter. But from a VPA perspective, you really want to see some big wicks to the tops of the candles, don't you, David? You don't want to see, candles that are as well formed as this one is. And you'll be looking at multiple time frames. Let's see what the 10-minute chart is. I've got the 6-minute. Here we are. Yes, the 6-minute chart here. The 6-minute chart, you've got the volatility, and this is what you would expect. You'd move back into the spread of this candle. So all, VPA tells you what's going on, what is likely to happen next. If you understand volatility, the indicators that we've developed, they all kind of complete the picture for you. Very, very quickly, if you've not come across the indicators before, they are available from Quantum Trading. As you can see here, MT45, Ninja Trader, and TradingView. We're going to look at TradingView. Should we do TradingView at the next session? If we've got time to do that. Usually we just do Ninja, but we might do TradingView and Ninja as well. I had my problem with my Ninja 7 last week. It had an update on my machine, and it had gone a bit screwy, as it were. But everything is there. You can buy one indicator, a bundle. You can buy the full package. The advantages of the full package is that when we develop new indicators, they are automatically added to your package for free. The last indicator we've developed is we've actually got an index for the British pound, which is what we need to look at now, because obviously we've got news for the UK. If you pop down here, underneath, you can read up and find out more information on the individual indicators, where there are lots of videos, support pages. Everything you need to know is why we developed them, and how, some suggestions on how you can use them. I mentioned the program, the Forex program. It's self-directed. I'll just bring up Quantum Trading Education. There we are. Those are the modules. And with the program, you get the full package, and you can choose whether you want an MT4 package, the Ninja, or the TradingView, and the prices all are slightly different. And as always, all our products are covered by a 7-day money-back guarantee and 24/7 customer service support. Anything else you want to add to that? And we are back later. If you're not joining us later, we are not back next week, are we? We haven't. We're going to take a break next week, just for next week, and we'll be back the following week. So whatever you're doing between now and then, have a lovely time. Thank you so much for coming along. If you've got a holiday coming up, have a brilliant time, and enjoy yourselves. Take care.